Bitcoin actually serves a useful role. It's a way to diversify your portfolio from that currency risk and from that operating risk.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses about Bitcoin. Michael Saylor says, I believe that Bitcoin will infiltrate sovereign balance sheets, both sovereign wealth funds and sovereign nations, beginning with the smaller ones that are more innovative as a small fraction. I know it's going to grow over time, but it's not going to replace the currency that's used as currency or the sovereign debt that's used as the lowest risk asset. It's going to replace real estate and equity and property and all the other things that people buy. It's like if you're the sovereign wealth fund of Norway and you're comfortable holding $100 billion of SP equities, you could allocate half of that to Bitcoin instead, and you might. It is a financial investment. I have $100 million in cash flow that I need to hold. Therefore, I've decided to invest 90 million of it in treasury bills, with maturities ranging from 3 to 12 months. Low credit risk, low duration risk, I'm getting some yield, and I'm holding it as a currency, a type of foreign currency equivalent. What's the downside? What's the upside? And lots of things Michael Saylor discussed, so please watch the video to end, and share, subscribe our channel Everyday Finance. Thanks.
Up until Bitcoin, they didn't have an option to actually hedge that risk. Today, you could actually hold the majority of your treasury assets outside of your local banking system, outside of your local currency, outside of your local country, and you could still operate. And I gotta believe that that's beneficial in a lot of ways. The obvious way is your company's more likely to last. The second way is, if you operate a business in, let's just say, a banana republic country randomly, and it doesn't have a rule of law, if the government wants to seize your mine or seize your bakery or seize your hotel, if all of your assets are in the local bank under the control of the government, you have no leverage, right? They just take all your money, lock up your bank, and take your factory, and you're bankrupt. But if you actually have most of your financial assets outside of that system, then they have a vested interest in negotiating with you, because they probably like to keep you a well-endowed corporation providing jobs and making investments in their country. So you see, a strong, diversified multinational is going to get treated better than a local, undiversified manufacturer. Right? This is the plight of Jews in the 30s in Germany, right? Where the Germans just seized all their money, took all their assets, took all their property because they didn't have a choice. But if you had a choice, if you had your money outside the country, then maybe you would say, maybe I'll give you half, let me leave, or I give you a quarter. Whereas what really happened in the day was it rapidly became, I give you 90% and then 95%, and then it was, I will give you everything I have, and my cousin in America will give you a lot more to let me out. And so that's the plight of the expatriate, under duress in the conventional system. And I think that that Bitcoin really is quite a powerful idea, because you can build a company where you're protected from being abused by the local government or the local marketplace by using Bitcoin as treasury asset. But you can also create a security and equity that has a lot more appeal to international investors, because you're holding an international asset, right? So you're less risky to people that would invest in you, and you're respected more and treated better by those that would abuse you. And so there's really no downside. And of course, if you generated $10 billion of cash flow over 10 years and you gave it all away, when the crisis comes, you've got nothing. Whereas if you generate the 10 billion in cash flows and put it in Bitcoin, when the crisis comes, you'll have $50 billion in assets. You'll have, right? When the crisis comes, it'll be a non-crisis, right? Because in the latter situation, your option is just shut down the factory, leave, and have the $50 billion and be rich. Whereas the other operating strategy is I gave away my riches to my investors, and if this factory gets shut down, I have nothing. So one drives, it's literally the road to serfdom, right? It drives you to desperation and eventually to death, corporate death. And the other is a path to life and vitality and prosperity. Bitcoin adoption is going to come from all channels. There are going to be on-ramps via crypto exchanges everywhere in the world. There are going to be on-ramps via peer-to-peer trading. People are going to actually trade their goods and services for Bitcoin to get in the ecosystem. There are going to be on-ramps from operating companies that start to heavily invest in Bitcoin. There's going to be on-ramps from the spot ETF, and eventually there'll be on-ramps from conventional banks like Deutsche Bank and the like. They're all different ways that capital will flow into the Bitcoin network. What'll be the biggest? The thing that's going to drive price most, that'll be the first order driver of the value in the network, will be the spot ETF first. If you have the ability to buy Bitcoin right now via a crypto exchange, you should count yourself lucky. You have, if you have the technical capability to buy it, and if you have the knowledge to be confident in buying it, then you're going to be the winner. Because you get to buy it at 26,000 a coin instead of $1 million a coin, right? And so when the institutions come, massive walls of capital come, and when they buy it, there's going to be a massive short squeeze. There's not enough to buy. The price is going to have to adjust up rapidly, and as the price adjusts up, then the ability for the humble pleb to stack sats and to benefit, it'll be there, but it won't. Instead, you'll be stacking sats at 250,000 a coin, not 25,000 a coin, right? And if you're making $10 an hour at McDonald's, right, that's the same as making $100 an hour then, right? So, you'll eventually look back and say, wow, I'm paying 40 times as much. So if you're making $10 at McDonald's, that's the same as getting paid $4,000 or $400 an hour, right? At that time. So right now is a very special period because we're at the tail end of the crypto period, or the crypto era, where everybody got Bitcoin primarily through crypto exchanges, and we're just at the cusp, at the beginning of the Wall Street era, where most people will get their Bitcoin exposure by buying an ETF from Fidelity or BlackRock, or buying some other security. And eventually you'll see a banking era where people will just go to their bank, JP Morgan, and they'll buy the asset, and there'll be treasury services for people who want to hold Bitcoin in kind, and then there'll be others that'll hold the spot ETF because they think that's a bit easier. And then there'll always be the community of maximalists, that are self-custodying with their own seed phrase and hardware wallet and the like. And there will be, I think, an explosion in options and diverse ways to acquire Bitcoin and hold Bitcoin. I can see at some point when all the banks have adopted it, maybe you acquire with your bank. I can see another point when Apple and Google and Microsoft will adopt it, and maybe you'll buy it and hold it on your iPhone. I can see a world of a lot of special purpose, Bitcoin seed phrase devices and signing devices, and there'll be competition there, and some people will do it that way. I can see a world where there will be layers, right? If Bitcoin is a layer, then Bitcoin sitting in the Lightning Network is sort of a layer up if it's custodial. Bitcoin sitting in a spot ETF is another layer. Bitcoin sitting on the balance sheet of MicroStrategy when you own MicroStrategy stock is another layer. Bitcoin sitting custodially in the iCloud may feel like another layer to people. And then Bitcoin insurance policies, or I can imagine Bitcoin funds and other ETFs that, imagine it's not an ETF which is pure Bitcoin. What if I actually take short duration sovereign debt and I mix it 50-50 with Bitcoin? So I end up with an instrument which is, on one side, it's generating 500 basis points of taxable income and low volatility versus the dollar. And on the other hand, it's generating 15% tax deferred appreciation. And I create this instrument which doesn't have the appreciation of Bitcoin, but it doesn't have the volatility. So you could imagine all sorts of securities like that. I think of Bitcoin as, it's like the sucralose of money. You know how you want to make anything sweet? You put a little bit of sucralose in it and it makes everything sweet. Your coffee, your food, your drink, your everything. Well, if I put a little bit of Bitcoin into my insurance policy, my Bitcoin insurance policy has lower premiums and higher payout. And my Bitcoin-backed bonds, they have a higher appreciation. Or maybe I lace Bitcoin into the S&P index and I give you half S&P and half Bitcoin. And then maybe I give you all Bitcoin. But I think that there'll be lots of different Bitcoin assets that people might want to buy. And you could even imagine Bitcoin getting built into different nations' assets, right? Like if I want to issue bonds as El Salvador, I issue Bitcoin-backed bonds. Or maybe in Turkey, I start issuing some kind of sovereign bond, which is half backed by Bitcoin and half backed by something else. And I give you a tax advantage to buy it. Like if you buy this bond, it generates yield, but you don't have to pay income tax on it. Like that's how New York City municipal bonds work, where the municipal bonds give you a tax advantage of your New York City dweller. So I can see Bitcoin getting securitized into lots of different assets, and ultimately it'll spread to billions and billions of people, and they'll use it lots of different ways, and it'll spread to thousands and thousands of companies, and they'll use it lots of different ways. And the early adopters will be the visionaries and the ones that have the greatest incentive. Like some people have a need. Hyperinflation is driving adoption, right? I mean, the reason that Bitcoin is popular in Turkey and popular in Argentina is because the alternative is not very appealing. If you convert all your money from local currency to dollars, put it in the local bank, and then the bank seizes your currency, converts it back to the local, converts your dollars back into the local currency and devalues it 10 to 1, then you're going to realize that simply buying dollars isn't a solution.